Everyone wants to invest smart, but most people just chase hype, panic with the crowd, and lose money. Benjamin Graham, the mentor of Warren Buffett, says the investor's chief problem, even his worst enemy, is likely to be himself. So how do you become an intelligent investor? Here's what the book teaches. 1. Separate investor from speculator. If you're buying stocks to get rich quick, you're not investing, you're gambling. The intelligent investor is patient, disciplined, and focused on long-term value, not quick wins. 2. Understand Mr. Market. Imagine the stock market is a guy named Mr. Market. Every day, he offers to sell you stocks, sometimes cheap, sometimes overpriced. Your job? Don't get emotional. Buy only when the price is right. Be rational when others are irrational. 3. Margin of safety. Never pay full price for a stock. You want a buffer, a margin of safety, so that even if things go wrong, you're still protected. It's like buying a $1 coin for 70 cents. 4. Defensive versus enterprising investor. Not everyone wants to analyze companies all day. If you're defensive, go with index funds or safe diversified assets. If you're enterprising, do the research and look for undervalued gems. 5. Emotions kill returns. Greed in a bull market, fear in a crash. Both will destroy you. The intelligent investor stays calm, steady, and focused on the process, not the noise. 6. Investing is not about genius. You don't need to be a genius to win at investing. You need temperament, patience, skepticism, and the ability to stick to your plan. Final takeaway? Wealth doesn't come from chasing trends. It comes from staying rational, buying value, and ignoring the crowd. Warren Buffett called this book the best on investing ever written. Now you know why. Like, comment, and follow for more summaries that grow your wealth and your wisdom.